Welcome back to another NVIDIA episode. Today we actually have a lot of big things to discuss. Both Tesla and Alphabet, aka Google, just reported earnings, and they did kind of share some insight about NVIDIA that I think investors should know. Unfortunately, we can't see after hours. The stock is down roughly 1.6%. So let's try to find out. And I definitely want to hear from you, the viewers. What are your thoughts on the recent earnings? So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned, right now, after hours, the stock is down roughly 1.6%. Let me just give a quick spoiler of the video. I don't believe anything completely bearish. There might be some bearish points here, but anything completely bearish that any of these two companies, Tesla or Google, mentioned today that should be affecting the stock after hours. I think it's more just the sentiment of how both stocks are acting after reports. We can see Tesla is down roughly 7.77% after hours, and we can see Google is also down roughly 2%. So I think right now the reason Nvidia stock is down is because of that bearish sentiment of earnings from both these companies. But like I mentioned, both of them reported earnings, and both of these are big investors in the AI space. Obviously, we know Tesla with their FSD, with their Optimus Prime, and all their other type of autonomy solutions. They are definitely a big player in the AI space. And Alphabet, aka Google, they have Gemini, their data center solutions. They have their internal AI for their advertisement solutions, for their search solutions. So both these players are very, very invested in this market. Now, if we take a closer look at one of the big things that Elon mentioned during the earnings transcript, and I have it here highlighted, is he starts to talk about NVIDIA and their kind of competitive AI chip, Dojo, which is in Tesla's internal AI chip that they do develop. So he kind of starts this preface by saying that he is incredibly impressed by NVIDIA's execution and the capabilities of their hardware. But they are seeing that the amount of NVIDIA hardware is so high that it is often difficult to get the GPUs. So he starts off by giving praise to NVIDIA, saying, hey, look, their products are amazing. The only downfall that we have right now is that unfortunately, it is very often difficult to get the GPUs as they are in such high demand. So right now, he is kind of concerned about the ability to get steady influx of GPUs. And for that reason, he wants to put a lot more effort on Dojo in order to ensure that they have enough training capacity. And this could be seen both as a bearish and bullish sentiment for NVIDIA. The bullish sentiment obviously is Elon Musk kind of showcasing that there's such a high demand for this product that they have to find alternatives. Obviously, the bearish sentiment here is the alternative that, hey, look, Tesla is now forced to kind of double down in their AI custom chip solution because they are afraid that they can't get their own GPU systems due to the overall demand of the product. As an NVIDIA investor, I really wouldn't be worried too much, and I'm hoping as supply chain increases for NVIDIA, it can kind of eliminate this risk, but we can see how Tesla needs to now double down on Dojo. But it also kind of gives us a big affirmation that, hey, look, right now, a big lead for a lot of these companies is going to be the computational power that they have. So it's, in theory, whoever has the most GPUs at the moment will be able to provide the best product no matter what. Obviously, you need computational power and data, but it does seem like, at least for now, the true bottleneck to see who's the best of the best is going to be computational power, aka NVIDIA GPUs. So again, this could be seen as both a bearish and bullish case for NVIDIA. The other thing that he mentions is he also thinks he kind of has no choice because the demand for NVIDIA is so high, and because of this, they can kind of increase their prices to whatever they want, which is very high. So right now, Elon Musk is thinking that, hey, for them to not be spending too much money, for them to not be too dependent on another source, they have to really double down on Dojo. And he does see a path to being competitive with Nvidia with using Dojo. And some might be saying, look, that's a bearish case. The only thing is, obviously, Tesla knows what type of workloads they're doing. When you know what type of workloads you're doing, you're probably able to create some form of ASIC solution that is usually really good for that one workload. We see all the other big tech players do it, from Google, from Amazon, from Microsoft, from obviously Tesla with their Dojo. So maybe in a significant workload that they need compared to the overall market, Tesla could be somewhat competitive for and compared to maybe some of Nvidia's solutions. I even doubt it there, but at least for one workload, there is the potential path of being competitive. In the total landscape of things, you need so much programmable solutions that a GPU has no competition anywhere right now. But before we go into Google, I do want to say I actually just released another ebook right now, and this is more of an overview of earnings. So this is the Earnings Insight Handbook of Quarter 2 of 2024. And right now, if you haven't purchased my handbook, which is the ultimate handbook for semiconductor investors, which has over 50 plus semiconductor companies, and it kind of gives you a great overview around them. If you buy both the handbook and the earnings book, you get $20 off automatically. If you already purchased the handbook, don't worry, I am sending you a coupon code that you can use to get the earnings insight at a cheaper price, because you provided support for me at an early innings of my first ebook. So I just want to showcase, if you guys want to learn more semiinvesting.com. Both of these are what I call living documents, so I do try to update them to give more information to viewers. Obviously, earnings are happening right now, so every week or every other week, I'm going to update them with new earnings. Right now, the book already has the latest earnings from Texas Instrument, from Enphase, ASML, TSMC, and the list goes on and on. So definitely check that out if you are big into the semiconductor market. Now, let's take a closer look at Google. So Google, aka Alphabet, we can see the stock is down roughly 2% after hours. So Alphabet, I mean, they are doing great. They top estimates as cloud business gains steam, but AI losses grow. And I think this is going to be one of the bearish sentiments we might hear in the upcoming, in this quarter in earnings is, hey, look, AI are, all these big techs are investing in AI, but are we really seeing the results? And this can kind of showcase or be brought up by the media as a negative sentiment towards Nvidia, because eventually they're going to say, look, all these big tech companies are going to say, hey, look, we're investing too much and there's no point in us investing, so we're going to reduce our Nvidia orders. So I want to say, be careful with that sentiment. I think we're going to continue to see titles like this. Big tech spends X amount of money on AI, but AI losses continue to grow. So now I want to take a closer look at Alphabet's transcript and see what they had to say about AI investments and AI accelerators. The first thing they do is obviously talk about their own AI accelerator, which is their TPUs, which is currently in the 6th generation. Trillium, which is their custom AI accelerator. Now, I want to say this kind of showcases that, hey, look, Google, who has invested billions of dollars on AI accelerators, is on their 6th generation, and they are still very, very, very dependent on Nvidia. So imagine some of these other big tech companies that are just starting off now. How long will it really take, if Google's still dependent on Nvidia, how long will it really take for big tech to eliminate that need of Nvidia? I don't think that's going to happen anytime soon, and Google is the prime example. Outside of TPU, Google does mentions that, hey, look, the Blackwell platform will be coming to Google Cloud in early 2025. I believe Google is going to be one of the first few customers of Blackwell, so that's when we should really start to see. And it kind of brings, it takes some time to bring up these platforms into the clouding market, to turn everything on, to test everything on. So we're most likely going to see Blackwell revenue at least a quarter before then. Then the other thing that they mention is they talk a little bit about CapEx. So in forms of CapEx, we're going to see that right now the company spent about $13 billion in the second quarter. And looking ahead, they continue to expect quarterly capex throughout the year to be roughly or at or above $12 billion. So obviously a lot of that money is going to technical infrastructure with largest components for servers followed by data centers. So obviously we can see that Google is going to be spending a lot of money on H100s, on H200s, on B100, and some of the other Blackwell architectures, and as well for their own AI custom accelerator that is built and kind of not built, but is kind of designed by Broadcom. So Broadcom can definitely benefit from this increase in capex. The other thing, and kind of the final thing that I want to talk about here from Google, is something that I think is very important. So there was an analyst during the Q&A session that say, hey, look, out of AI capex, looking at it from the outside, hyperscalers are kind of really over investing right now. Is this something that we should be worried about? And Sundar, the CEO, pretty much mentions that, hey, look, I think that's a great question. Obviously, we are in early stages of what he views as a very transformative area in technology, AI, right? We're talking about AI right now. When you're going through these transitions, aggressively investing upfront is a defining category. So right now, Sundar believes that AI is a huge technological transformative area for technology, and right now they have to invest aggressively because this is the reason for them. When you kind of think about it in this curve, the risk of under investing is dramatically greater than the risk of over investing. Even if scenarios where it turns out that they are over investing, this infrastructure can be used for a lot of other things outside of AI. So it's not necessarily a complete lose situation if they are completely investing in AI infrastructure. But if AI is really as transformative as everybody thinks, they need to invest very heavy. So he thinks investing to be at the front here is much more riskier than not over investing in this market. And I think at the end of the day, a lot of big tech companies are thinking the same way. So we're going to continue to see big over investments from AI players as they continue to want to be ahead in the AI space. Now, again, don't forget to check out my website, moresemiinvesting.com, for either the Semiconductor Handbook or that Earnings Insight Handbook, which I believe provides a lot of information. I personally have learned a lot already from creating that book. And like I mentioned, one will be getting updates over time. So take care, have a good day, and see you all next time.